Before I begin today, I would like to thank first Jean-Michel for organizing the conference with Currency Research, which gives us the opportunity at CLS to speak about this cross-border payment topic, which is very important for us, and in particular on the mitigation of settlement risk, as we are trying to address those issues in CLS. As you know, it's at the heart of our purpose. Hopefully, I hope not too far in the future that we'll have the possibility to do this again physically, so we can have also interaction and debate around those issues around the session itself. But for now, we have to do with this virtual world. First, I would like to pick up from Victoria's, in fact, comprehensive updates that she gave on the progress being made by the CPMI FSB on the roadmap for enhancing cross-border payment. In fact, it's very encouraging to see that the majority of the milestones for 2021 have been successfully completed, and in fact are close to being finalized as we get towards the end of the year. And the overall roadmap remains firmly on time and on track, which is very important for us. We really applaud this work. It's, and I know it by experience, not easy to conduct, and the fact that all authorities are participating is very important. Cross-border payments sit at the heart of the international trade and the economic activity, and so by its very nature, involve the settlement of an FX transaction, which requires counterparties, basically, to exchange principal in two currencies. But what if one of the parties of the transaction collapses? The result would be a loss of principal. And this risk is being mitigated by having an appropriate PVP, payment versus payment, settlement mechanism in place that CLS is providing. So such a loss of principal may be manageable if the amount is small. However, today, when we look at the global FX market, it's anything but small. It is, in fact, the largest financial market in the world currently, with an average daily turnover of more than 6.6 USD trillion equivalent exchange every day. A very big amount. And in recent years, regulators and industry participants alike have become increasingly concerned that the FX settlement risk may be reaching level that threaten, in fact, potentially the global financial stability. At CLS, we have been particularly focused on building Block 9, which is on the roadmap of the FSB currently, which focuses in facilitating, in particular, the increased adoption of PVP, payment versus payment mechanism, with the objective to mitigate settlement risk that occurs during cross-border payment, which typically, again, involve two or more currencies. However, the proportion of the FX trade not settled in a PVP basis has increased in recent years, and exposing FX market participants to substantial additional FX settlement risk. I will explain the reason for this a bit shortly in detail. As a result, we are encouraged by the FSB assertion and CPMI participation in this latest development, and in particular that they will develop proposal for increasing adoption of PVP by encouraging enhancement to the existing PVP arrangement, and also, or eventually by the design of new public sector and now private sector solution for PVP arrangements that currently do not exist by April 2022, very ambitious deadline to come. CLS role is to strengthen the resilience and efficiency of the FX ecosystem. It's at the heart of our purpose. And we have long advocated for greater PVP adoption to mitigate FX settlement risk, working closely both with the private and the public sector to highlight its importance. And we fully support the FSB roadmap effort in this area. Our recent activities have included establishing a working group and industry pilot to explore alternative PVP solutions, as well as speaking at industry events on the topic, like today, and presenting at the Global Foreign Exchange Committee and several regional FX committees in order to raise awareness on the issue and to explain what type of alternative PVP to the current core service we are operating can be developed in the market. Looking at this together with the market is a very key point. CLS will be, in fact, celebrating 20 years anniversary in 2022. During my time with you today, I would like to remind what the industry has been already achieving in mitigating FX risk in that time. I will provide them more detail about some of the work underway to further mitigate the risk and how we see CLS role in supporting the industry in the future. However, before I start, I think it's important to provide an overview of why settlement risk is increasing. In our conversation with our settlement member banks, it has become apparent that the increase in settlement risk is driven primarily by an increase in the turnover of non-PVP settlement trades in emerging currencies. This is supported by the BIS triannual report that they are doing, survey that they are conducting, where trades which are on a non-CLS settled eligible currency is on at least one side of the trade equate approximately to 1.25 trillion USD equivalent on a daily basis, which is an increase of more than 35% since the last triannual survey of 2016. So while US dollar and euro, to a certain extent, on one side of the vast majority of this trade, without PVP settlement, both sides carry FX settlement risk for CLS settlement members and more widely for the FX ecosystem. These findings have resulted in a heightened focus on overall risk management in cross-border payment, with both the public sector and market participants expressing particular concern about raising FX risks and calling for greater adoption of PVP mechanism as the optimal solution to mitigate it. In addition to the work being carried out by the FSB and CPMI to tackle settlement risk, there is a second public policy initiative addressing the issue, the 3-year review of the FX Global Code of Conduct undertaken by the Global Foreign Exchange Committee, which was published very recently this year, and which has updated the code with amendment to key principles, in particular for the purpose of today, on the settlement risk, the so-called principle 35 and 50, which are placing greater emphasis on the use of PVP settlement mechanism where available and providing more detailed guidance on the management of settlement risk where PVP settlement is not used. I believe the changes to the code will encourage FX market participants and the whole ecosystem to explore ways to mitigate further those risks and reduce operational costs by adopting a best practice approach to FX settlement risk management and to netting. CLS' unique position at the center of the FX market positions us perfectly to work with both the public and the private sector, collaborating widely across the industry and enabling us to find solutions for challenges for the FX industry faces. Therefore, to address the issue of wider PVP adoption and to deliver improvement cross-border payment, we are encouraged to see collaboration between the public and the private sector, as I called upon a year ago in particular. In order to create a successful industry solution, it is essential that policymakers should and are engaging with market participants during the early stages of the new market infrastructure initiative to identify and develop optimal models. In this case, what we call an alternative PVP solution. This approach is crucial to ensure that the market needs are truly understood and that the preferred solution obtains sufficient investment and support from the industry. CLS itself was established in 2002 as a result of an unprecedented cooperation, I should say even stronger, between the industry and the central bank community. 20 major financial institutions from the group, which supports from central banks, refined the PVP concept that remained at the heart of CLS settlement system today. Now, nearly 20 years later, we continue to work closely with the central banks and regulators and partner with the leading commercial bank, global corporation, and financial institution to mitigate systemic risk. And we will continue to do so by developing the alternative PVP solution for the FX industry. Again, it is at the heart of our purpose. So what is CLS doing to address settlement risk today? Over the last 20 years, CLS volumes have risen significantly, which is testament to the current value we are providing in mitigating settlement risk in the FX industry. We currently settle on average approximately 6 trillion USD equivalent of payment instruction each day across 18 currencies. We do this by simultaneously settling the payment instruction for both sides of an FX trade via our PVP system. We support over 70 of the world leading financial institutions as settlement members are directly participating at CLS service. In addition to global bank, we have more than 28,000 third-party clients around the world accessing our service indirectly through the settlement members. This includes banks, funds, non-bank financial institutions, and multinational corporations. We are actively engaged with our third-party participants, and activity from this community continues to be a major contribution to growth in CLS settlement activity. Over the past year, an average daily gross volume settled by third-party has increased by 18%. This increased adoption of our PVP settlement system by third-party participants is being overwhelmingly driven by the asset manager community, with much of the growth resulting from the increase in pension funds investing internationally, resulting in more FX activity. Such market participants recognize that they need a strong infrastructure that can mitigate the risks that arise from FX trading, as well as deliver liquidity and cost benefits. Additional growth can be attributed to firms moving to a multi-dealer model and not always trading FX with their custodian bank, where settlement risk is eliminated. Hence, the need for a settlement platform offering risk mitigation and efficiencies. With asset managers trading FX settlement risk more seriously and looking to identify cost saving, many are now rethinking their traditional approach toward FX settlement. As part of this shift, we are working with custodians to explore ways to expedite onboarding of new participants. We expect the growth of third-party participants in CLS settlement to continue. To provide risk mitigation and operational efficiency for trade not settling in CLS settlement, we launched CLS Net in 2018 for over 120 currencies to support standardization and automation of post-trade matching and netting processes. The CLS Net user community includes major global banks, as well as several leading regional banks, mostly from emerging markets. In addition to existing CLS settlement members, CLS Net can be used directly by non-CLS banks and the buy side, enabling a wider group of market participants to benefit from reduction in operational cost and mitigation of risk to the service delivers. To further support broad-based adoption of CLS Net with this community, we are collaborating with other FX ecosystem service providers to expand connectivity options and evolve functionality of our service. CLS Net was a great addition to our suite of risk mitigation solutions, but it is clear that the industry now requires an alternative PVP mechanism for currencies that are not currently eligible for the CLS settlement core function. With this in mind, last year, we established a working group of 12 settlement members with global operation to evaluate market demands and explore alternative PVP solutions. Initial feedback from our working group shows a strong interest in an alternative PVP mechanism. And as a result, an industry pilot is underway, which evaluates the liquidity and settlement risk potential models. This work is being planned with the FSB roadmap's timeline in mind to ensure that we are placed to provide input as it progresses. Expanding the availability of PVP to a wider range of currency will not only further mitigate FX risk, but it will also support liquidity optimization in the FX market. In addition to the working group initiative and to better understand the settlement risk for currencies that are not currently eligible for CLS settlement and how FX trade are settled in those currencies, we are working with our global settlement member to analyze their settlement activity. It is expected that the result will provide further transparency on settlement behavior in the FX market and enable us to contribute useful findings and conclusions some of the policy initiatives I have discussed today. We believe that an alternative PVP mechanism is the most effective way to address settlement risk, given that the majority of risk now lies with currencies that are not eligible for CLS settlement. As a systemically important financial market infrastructure, subject to the Principle for Market Infrastructure, the PFMI, our ability to expand PVP protection to new currency and improve direct access to settlement is therefore defined by this standard, which require a high level of protection for legal basis and settlement finality in particular. For any alternative PVP solution to be successful, the guiding principle needs to be not to dilute those standards that have served FMIs very well and the stability of the ecosystem, but to ensure standards are not a barrier as well to risk mitigation. We will continue to engage with countries that can meet the necessary standard and aim to bring those currencies into our settlement service. We have been working with Chile, which enacted key legislative amendments in recent years and are aiming to bring the Chilean pesos into CLS settlement. This will be our first currency for South America. On the question of non-bank participation, we believe that an FX settlement system should permit fair and open access while also balancing the protection of its member and the integrity of system itself. So a wide range of requirements such as contingency plans, capital ratios, and minimum long-term credit ratings should be in place. Certain low-risk, non-bank participants should have the ability to participate directly in such payment system. This includes supranational institutions, multilateral development banks, foreign systemically important institutions and their operators, and sovereign wealth funds. Lastly, the industry must continue to develop standards, particularly ISO 20022, that will enable cross-border payment to advance effectively and make interoperability between payment systems possible. While our initiative to development an alternative PVP has considerable industry support and momentum behind it, any new solution must prioritize safety, stability, and scalability. For any alternative PVP solution to be successful, due consideration must be given to certain factors such as account structure, legal framework, and local market practices and regulations, and will require ample time for appropriate implementation. Further, for any FMI to deliver an optimal solution to public policy and industry challenges such as wider settlement risk mitigation, it must invest heavily in its product, risk management, control, and respective underlying technology on an ongoing basis. For CLS, this means investing in our resilience posture, cybersecurity, and 3 lines of defense to uphold the highest operational standard and ensure high quality expected by CLS as a designated financial market utility. Earlier this year, we successfully completed a significant phase in our multi-year technology investment program, mitigating our PVP settlement service, migrating our PVP settlement service to a state-of-the-art technology platform. We are now focusing on upgrading the hardware and data centers that support CLS settlement to ensure we continue to deliver the effective and resilient service our clients have come to rely on. The investment we have made means we now have one of the most sophisticated, resilient, scalable, and flexible post-trade technology platform across global FMIs, which will help us to evolve our PVP offering more easily to the requirements of the evolution of our FX ecosystem. The implementation of best practices related to mitigating settlement risk and efficient post-trade practices in the FX market is a high priority for market participants, policymakers, and regulators, as we just heard earlier. As a systematically important FMI that operates a settlement system for FX transaction, our settlement service, we support the industry objective regarding mitigating settlement risk and are committed to raising awareness of PVP adoption more broadly. In conclusion, in order to develop the optimal model to solve these industry challenges, policymakers and the private sector should and are in fact engaging with market participants on an ongoing basis. This approach is crucial to ensure the market's needs are truly understood and that the preferred solution obtains sufficient industry investment and support. In short, a strong public-private partnership, similar to the one that created CLS in 2002, is required to build a successful cross-border solution to remove FX settlement risk from financial markets. Thank you very much for your time. And now I am happy to answer any question from the audience that may come on this topic, and would be happy to follow up with you. Thank you.
Okay, thank you very much, Marc. I mean, there might be questions from the audience, but because this is pre-recorded, we will have to convey the questions to you directly, but for sure we will do that. In the meantime, I have two questions for you. The first is that CLS from the beginning has been focusing on foreign exchange settlement risk and PVP transactions. I mean, you have explained that there are more work to do in this field. But in the meantime, the focus of the public authorities has moved to plain vanilla credit transfer transactions, cross-border transactions. So basically, is CLS going to remain on the PVP field, or do they intend to widen into, let's say, plain vanilla credit transfers with only non-PVP, let's say, transactions?
Yeah. No, thank you, Jean-Michel, for the question. It's always important to set the scene of the evolution of CLS. CLS as a mission purpose, by the way, that we revisited last year with our board, and which is really showing that the heart of what we are is to be at the heart of the FX market. So we are bringing efficiency within the FX market, and will do any initiatives which helps to resolve this settlement risk related to the FX solutions. So to answer your question, we are not into the one-side payment type of activity. We are really into the FX settlement context. For this purpose, we have different ways to do it, however. So as I mentioned in my presentation, netting is part of the service we are providing. So the calculation of netting amongst our participants on settlement of currencies which cannot be settled today through our settlement service is one of them. Creating alternative PVP mechanism for those currencies which are not yet there and cannot yet join our core services because of the complexity of regulation and the legal context in which they are operating in their countries is also a priority for us, because it carries a lot of systemic footprint and the capacity to disrupt the FX ecosystem. So that's where we intervene. That's where we are, let's say, focusing on our purpose.
Okay, thank you, Marc. I just would like to remind our audience that already with a limited mandate that they have, CLS is by far the biggest payment system in the world. So, I mean, it's important that whatever is being discussed, CLS does their job properly, because the, let's say, financial stability for the whole world is very much dependent on CLS performing well. Marc, I have a second question I have many questions I'd like to ask, but I would like to ask a second one. You mentioned the importance of public-private collaboration. And just before you, Victoria Cleland said the same thing, that the public sector and the private sector has to cooperate in order to find better solutions for cross-border payments. Could you tell us give us a few indications of what CLS has done to, let's say, meet this objective?
So we are first, as I mentioned, we are very active in the way we engage and create awareness in both the private and the public sector. We are lucky. CLS is operated by an oversight committee composed of 23 central banks, which give us the possibility to explain to those community of central banks the importance of what we are doing and the necessity to apply sufficient scrutiny on the evolution of the settlement risk. And again, the work being done by John Conniff and Victoria into this FSB CPMI roadmap is really very important. And this focus is very important for us because it really identifies the complexity, at the same time, the risk related to the evolution of our ecosystem. And that's a piece of the public part which has to be taking place. And then we will hope that they will send strong policy messages to say how much it is important to resolve this risk. On the other hand, we collaborate closely with the market participants. First, we have created this group of 12 global players with whom we are working to define solutions which have to be pragmatic, answering not only the risk, but also the liquidity and the efficiency challenges that they are facing in operating in these markets. And it's coming together that makes this a success. One without the other will not make it.
Okay, thank you very, very much, Marc. If we had more time, I would have more questions to ask you. But anyway, I'm sure we will continue in the Central Bank Payments Conference to connect with CLS and follow what you are doing. Thank you very much.
Thank you.